All right, let's talk about it. It seems to be the subject of all the housing market headlines, and that is mortgage interest rates. So let's do it. Hello everyone, welcome back to my channel. If you are new here, I'm Jen, your Delaware Realtor. I'm a local Delaware real estate agent that basically covers the entire state because we're pretty small. So whether you're looking to buy or sell in Delaware, I would absolutely love the opportunity to help you. My information is down below in the description, so please feel free to send me an email. All right, so let's talk about the 30-year fixed rate because that seems to be the subject of everyone's headlines this past week. And the reason is because we may have seen a slight change that is going to help you to afford a little bit more of a house, a little bit. So let's dive in what changed, why it changed, and where we're seeing it going. So we all know by now that interest rates have definitely risen in the past 2 years. With us hitting the peak at 7.2, depending on what type of loan you were using last year. And as of this month, July 2024, according to Freddie Mac, a 30-year fixed rate is sitting at a 6.89%. Now, this is down from the past 3 weeks where we have been over 7% or even 7.1, 7, right around 7. This is why I said in the beginning that the home would be slightly more affordable because this is not a huge change, but we are trending in the right direction. Now, whether this lasts going in that right direction is still to be determined. So what is driving the interest rate downward? Let's talk about that. Number one being economic indicators and inflation. Inflation topped out in 2022 at 9.1%. Currently, we're sitting at a 3.2%. And with the expectation that inflation is finally giving us a break, and it seems that the labor market is starting to cool off, economic indicators are indicating that essentially inflation is finally trending in the right direction and that hopefully we're going to hit that 2% that the Fed is looking for. The number two reason is the Federal Reserve policies. The Fed rate is currently sitting at 5.2%, but it's anticipated that the Fed is going to do a rate cut. And experts are still predicting that we are going to see 3 rate cuts just in 2024. And we're already in July. So I'm still finding this a little surprising that they're still predicting us to see 3 rate cuts. Currently, I just don't see that, but I also don't have a crystal ball. Maybe they will surprise me and we will see rate cuts, but I really would not bet on that. The number 3 reason is market dynamics. You know that if you've watched my other videos that mortgage rates follow closely with the 10-year treasury bonds. And the 10-year treasury bonds is on a downward slide. So mortgage rates are following suit. So the lower rates mixed with slightly more inventory and we are seeing more price reductions on the market is making it slightly, and I need to reiterate, slightly better for buyers to navigate this market. Slightly. I need to keep saying that. It's not tremendously by any means. Speaking of market dynamics, let's just talk about the market right now. You have homeowners that are basically feeling stuck. And the reason is because most of them are sitting on sub 3% mortgage rates. And the thought, or even actually on paper, to trade up for a higher interest rate with home prices where they are is scary for a lot of homeowners. And most of them either say, I can't afford it, or I simply just don't want it. As more and more things become more expensive, you have car insurance that's going up, you have grocery bills that's going up, kids' sports are going up. Like everything is just going up in price. I feel like every day someone's just like, oh, that's actually $50 more. That's $40 more. Oh, that's actually $30 more. Like every day I feel like that is what's happening. So as more and more things become expensive, homeowners are looking at their budget, and what used to get them an insane amount of groceries gets them 4 things at Walmart. I know this from personal experience. So what's happening is that these homeowners are saying, I'm just going to stay put because as much as I maybe don't like my house, I can't trade up for a 6.89% mortgage rate when I'm currently sitting at a 2.6 mortgage rate. And I'm looking at, $1,000 payment as opposed to a $26 or $27 or even $3,000 payment. So the market right now is honestly just frozen, with buyers not wanting to purchase because they can't afford the mortgage payment or they don't want to. And sellers deciding that even though they may despise their house, they're going to make it work. Whether it is they decide they're going to turn a closet into a bedroom or a nursery, or maybe they are going to try and figure out maybe they could do an addition or a shed or a pole barn or anything else just to see if they can make more room for themselves if they need more room. But what I am seeing is the baby boomers are starting to sell their family homes. And the reason is because they can ultimately get top dollar for it and then buy their next house cash and not have to worry about the mortgage interest rates. Now, this does open up an opportunity for buyers that are maybe looking for that home that maybe needs a little bit of work. They can put some sweat equity in, or maybe they're looking for a home that isn't move-in ready, which I know is few and far between. But at the same time, the opportunity is out there if you are looking for a home that maybe isn't move-in ready. But that's ultimately what I'm seeing in the market right now. I'm also seeing more homes stay on the market for longer than a few days or a few hours. I'm seeing them sometimes 2, 3, even 4 weeks on the market, sometimes longer, depending if they're priced correctly. I am also seeing many price reductions, whether it be that they just price themselves out of the market right off the gates, or they went off the comps and there's just not enough interest and they really need to sell. But I am seeing more price reductions. So that's basically what the market is right now. And let's talk about where we see rates going from here. If I look into my crystal ball, which I don't have, but if I did look into my crystal ball, experts are predicting that mortgage rates are going to sit between 6.7% and 7.1%, which is actually, if you think about it, is lower than the average before COVID. Okay, think back to, like, if you zoom out and look at the housing market, like through the years, the average interest rate was a 7.8%. So we're still slightly lower than that. And you will hear baby boomers say, oh, I bought my house at 11% or 12%, but they didn't buy those same houses at the home prices that they are currently. So that's something that we need to keep in mind. So even if we're sitting at a 6.7% or a 7.1%, it's not moving that much, honestly. Even with 3 rate cuts still predicted by the Fed at the end of 2024. So I recommend that if you are shopping for a home, especially new construction, it may be in your best interest to lock in your rate now. Because although we're not sitting at the lows of 2021, I fear that the experts may not get this right and we may not see those rate cuts at the end of 2024, and that we actually go up slightly from where we are right now. Because like I said, we're sitting at a 6.89%, but if they go to 6.7%, that's a risk that you can take. But what if they go to 7.1%? And especially with new construction, because you're looking at 6 to 8 month timeframes for building construction. I actually just had a client tonight that said, hey, my lender said that I should lock in my rate. And I totally agreed with them, because my fear is that if it jumps up to 7.1%, you're kind of sitting at a 7.1% instead of a 6.8, or depending on the government loan that you're using, if you are using one, you could probably lock in a 6.5%, which is even slightly better than where we're sitting at currently. I always think it's important to talk to a trusted mortgage lender. Let them play out every scenario possible, whether it be that you put more money down, or maybe it doesn't make sense to put more money down and you should keep that cash. Or maybe they know a loan assistance program that they can get you in. It doesn't hurt to reach out to a mortgage lender and just get the ball rolling and talking to someone. Also, reaching out to your trusted realtor and just determining like what's out there, what the market looks like, and making sure that they can answer that question for you. I really hope this video helped. If it did, be sure to give me a thumbs up. Be sure to subscribe to the channel. If you are a buyer that is looking to purchase in Delaware, I would absolutely love the opportunity to help you. My information is down below in the description, or you can send me an email, or we can set up a one-on-one buyer consultation. If you are a seller that is looking to sell your property in Delaware, I would also love the opportunity to help you. There's a link down below in the description for an instant valuation of what your home is worth, or you can send me an email and I can send you a personalized CMA. Once again, I really hope this video helped. If it did, be sure to give me a thumbs up. Be sure to subscribe to the channel, and I will see you in the next one. Hey, if you were thinking about purchasing in Delaware, you should definitely check out this video right here. And if you would love to tour Delaware communities with me, check out this playlist right here. And don't forget, subscribe to my channel.